Welcome to this week's Video Insight. I'm Chris Demasi. Today I want to talk about the importance of pricing power. Pricing power simply refers to the ability of a business to raise its prices without adverse consequences. At Montgomery, we believe pricing power is a key determinant of the quality and the prospects of a business, two of the three key facets of our investment philosophy. Warren Buffett took this to another level in an interview with the Financial Crisis Inquiry in 2011, when he said, "The single most important decision in evaluating a business is pricing power." He elaborated that if you've got the power to raise prices without losing business to a competitor, you've got a very good business. And if you have to have a prayer session before raising the price by even 10%, then you've got a terrible business. So why exactly is pricing power so important to us? At a minimum, pricing power allows businesses to pass on cost increases to their customers. All else equal, this enables the business owners or the shareholders to maintain purchasing power of their income over time. We trawl through company financials every day looking for businesses with a demonstrated history of cost increases being countered by price increases. Only then can we conclude that a business meets our quality threshold. Even better than increasing prices in concert with cost inflation is the ability to raise prices ahead of costs. This is a rare but highly valuable attribute, as the price rise beyond cost inflation represents pure and real profit for shareholders. Businesses with this sort of pricing power will grow profitability and returns and compound value for their owners over many, many years. We're digging deep every day to try and unearth gems with this sort of pricing power, and it necessarily takes us far beyond reported financial statements. So what are some examples of these treasures? Well, I have a couple. The first example is CME. CME is the owner of the CME, CBOT, NYMEX and COMEX derivatives exchanges in the US. CME is the near monopoly exchange provider for derivative contracts on US interest rates, US equity market indexes, energy products, commodities and metals. When buyers and sellers want to transact, they know that CME has the largest and deepest liquidity pools, and that is where they meet. Importantly, CME also stipulates that it provides the clearing function for each trade on its exchange. Not only are traders compelled to trade on CME, but they can't leave once they do. This competitive advantage has enabled CME to regularly and robustly raise prices over many years on a predominantly fixed cost base, which has resulted in S&P 500 leading operating margins that are well above the 60% mark and incremental margins of 90% plus. Yet CME's take rate of around $3 billion annually compares to hundreds or even thousands of trillions of dollars of derivatives that change hands each year, and it's growing. A second example of superior pricing power can be found at another US business called Verisk Analytics. At its heart, Verisk owns a proprietary database of general insurance claims built over a period of decades. This data is mission critical for US general insurers, which are Verisk's customers, and they cannot access it anywhere else. Again, a strong competitive advantage has enabled years of consistent price increases, which have driven operating margins towards 60%. However, Verisk's current pricing represents only a tiny fraction of the value it provides. Every year, US general insurers write almost $600 billion of premiums and pay out nearly $400 billion in claims, which are informed by Verisk's data, but only compensate Verisk about 0.2% of the premiums they write. Both CME and Verisk have demonstrated strong and sustainable competitive advantages, which have enabled pricing power in excess of cost inflation over many years. Moreover, the tremendous value both companies are bringing to their customers dwarfs their current pricing levels and bodes well for purchasing power well into the future. At the right price, these are exactly the types of businesses we seek for our clients' capital. That's all for this week, and please don't forget to follow us on Facebook and Twitter.